Hey everybody, and welcome back to Wayfarer Ways. So before we start this video, I want to clarify a couple of things that I forgot to mention when I recorded this video yesterday. Now, the first thing I want to tell you is that what you're going to watch is me trading the index of the S&P 500, which is called the ES. Now, there is a micro version of that, and a micro version of the ES is called the MES, and that's what I'm going to be trading. And in the MES, each point is worth $5, and I'm going to be trading 2 contracts. So when you see me open up a trade, you're going to see 2 targets, and each target is going to be worth 1 contract for $5 each. And I'm going to have 1 stop, and each stop is going to be worth $10 for 2 contracts. So I just want to clarify that for you. If you have any questions, then ask me in the comments section and I'll clarify it as best as I can. Now, this is simulation trading, so I'm just doing this to work on my discipline, follow my rules, and take my stops where I'm supposed to, and be prepared for when I eventually go back to Cambodia and I start trading funded accounts. So that's about it. So let's just get to the video. All right, thank you. Okay, everybody. So it is August 20th, 2026. We once again have some market movement in the pre-market. Ever since I came back last week to start looking at the market again, the market had been slow, but as you can see here yesterday, the market started moving again. Not what it usually is like, but pretty close to it in many ways, but at least we have some movement. And today we have movement again. Now, if you look at the market since Monday, you can see that the market has been going down, down, down. And yesterday it made an attempt to go back up. And then in the pre-market, it went down again for new lows right here in the overnight session. So we're going to be looking for some downward movement. So I'm thinking shorts right now, unless we get some convincing evidence that we're going to the upside. I had this trend line right here. It's a little steep, but it is a trend line. If we break this trend line and come back, then maybe we'll go for the upside. But the market's about to open, so let's see what happens. And I have my yellow line here as my marker for the market open. And this line right here is the line for when the market opens after the day session ends the day before. So this is all pre-market. All right, here we go. I'm wondering if this market's going to come here and test this backside of this trend line, and then turn and go. This line right here is from over here. This was a pivot, major pivot, where the market turns back to the upside. So I have it marked out just like this one, because sometimes the market will come back. Sometimes these pivots will matter, but it blew through those pivots. Sometimes it comes back and tests the backside of those pivots and then goes. So this one doesn't seem to care. This one, maybe it will. We'll see. But I always keep those marked out because it can give you some predictability for what the market's going to do later. Not all the time, but sometimes. You've seen it happen enough to mark it out at least. Now, usually I don't trade in the opening minutes of the market because in the past, I've done the numbers, and when I do that, a lot of times my first trade is a loser. And if over a sequence of trades, you see that your first trade's always a loser right after the open, then it kind of makes you think twice about taking the opening trade like that. So what I decided to do was wait about 5, 7 minutes to let the market kind of show what it wants to do, and then I'd step in. In saying that, though, I've been thinking recently about going over the market, going through some historical data, and just seeing if that's still a rule that I want to stick by. Because sometimes right after the open, you can get a good trade. So markets change, markets change how they move sometimes. And so, therefore, if the data shows that opening trades are good after the open in the recent way the market's moving, then maybe you need to adapt and change that rule. Set that trend line. You broke it. There's no news today. So, no market news. The field is wide open. Let's get a market order here, a trade order, so that we can be ready for something. Let's mark out this trend line. Bit steep, but oh, look at that. I should have gotten in here probably. That's on the back side of that trend line. Ah, yeah, I should have gotten in on this one. I was too busy marking this out, and it snapped back and took off quickly. Ugh, what are you gonna do? I'd like to see the market come back around here, the deeper pullback area. You have these shallow pullbacks not coming back to the mid band, right into 20 SMA. Boom. Shallow pullback, shallow pullback, shallow pullback. So I'm going to wait for something back here. But this market also might just be coming back to test the backside of this area. But I don't know if this area is in play anymore, really. It's gotten a little messy. Reversal bar? Yeah, let's give it a shot. Put the stop at the outer bound. Let's put the targets. First target by this pivot, second target by the outer bound. Now we just wait. That's never good to see. Hmm. Yeah, I came back. Yeah, I had to put on the chart markers. Da, 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 da. There we go. So maybe this area means something because it came back. Maybe. But the most important thing, though, is that I waited for the trade. I didn't chase price. I waited for the trade to come back. I got in where I should, and I got out where I should. I should have gotten out maybe it's a little bit higher, but this came back really fast, and I would have liked to have gotten out more up here. But that's fine. All right, so what is this doing now? Is this going for another attempt? This could be a short, but I don't know. This V makes me a little skeptical about taking a short here. Yeah, it feels like, I don't know. Yeah. See, I got a little ticked out. Oh man, if this comes back, then we'll get back in again. I'm gonna have a short leash on this though. This comes back, beautiful, but I will have a short leash on this thing. My stop will be short for this one. Because that momentum is to the upside. But all this is going down. Hmm, not sure. No, it looks like it's leaving without me anyway. Yeah, it left without me anyway. All right. Damn, man. It came back far enough to low tick me, and then boom, it went. And that can be frustrating, but that's just what happens when you trade. You will get low ticked or high ticked out. And then the market goes where you thought it would. It's just the nature of the beast. Does it suck? Yeah. Yeah, it seriously sucks. But you just have to accept it. If you can't accept that, then, well, trading is not going to be a fun journey for you. Hmm. I don't know what to do here, really. I don't think this matters anymore. It's getting in my way, too. Let's see. What are you going to do here? Hmm. This is second time's a charm? This could be a second time's a charm. See right here? All right. It could be a second time's a charm. I'm going to put this here and I'll put this up here. I'm not going to have a big stop for this though. But this looks like a second time's a charm. That's what the market will do sometimes. It'll give you a second time's a charm on things. It'll kind of fail the first time and then go the second time. Ah, let's see. What are you going to do, man? Yeah. Okay, if this fails, where are we going? This fails, I'm not doing anything. I'm gonna have to wait to see where this goes. Okay, the most important thing, Mike, is to take your stops. We know where you should. You know where you should take your stops. So take your stop. Don't move it. Don't move your stop. That is your kryptonite. Anything, I'll just call the trade and pull out. Let's see what happens here. If it bounces off this 20 and turns, come back down, then probably get out. Yeah. I'm getting out. This doesn't matter anymore either. Let's see about going to the downside. I like to see this come up here. Put the stop here. Is this going to be just a mean reverting market? I hope not. Put that there. First trading opposite direction. I'm going to put the target, first one right here, kind of lined up with these guys. And then if it does come down, there's a chance it could break. And I'll line it up with these guys here. Mark the pivots out from when the market came up. Okay. I'll give it a little bit more room to breathe. Actually, I think I'll move it down just a little bit more. Mm. There she is. There we go. Yeah, I'll take out the outer band. Yeah, I'll take out the outer band. I've been getting a little burned recently with putting my target too far out. So let's take it there. Let's see, maybe this will mean something. Now I wonder if it's going to come back to the, see this trend line, this green one. I wonder if it's going to come back to the backside of this and turn around and go. Hmm. I was hoping for it to come back up here to this area right here off of this trend line for a better price too. Mm. Now, as above, so below. What did it do here? Ah, here we go. Let's see. Hmm. Come on, baby. What are you going to do? There we go. You just went a little bit further back than we thought. I wouldn't mind. Putting this down by here. That is some movement. So I am wondering if this is going to go for a little bit more. But those pivots are there. So, mm, let's take it the outer bound. Yeah, because those pivots are there, so I should probably take out the outer band there. What was this? 4.75. So like 7. That's not the best place to put the eye trade. So, hmm. Ah, I was waiting for more of a, ah, damn, I just missed getting in on that one. Should I get in on the B idea, not the A idea? Yeah, okay. Didn't get in here, but over here is okay. You're just trading into these pivots, but fuck it, huh? I hesitated here and I shouldn't have. And I know it. I shouldn't have. I should have gotten in. All right, what are you gonna do? There we go. Come on, baby. All right. The mid-band held, which was nice here. So that showed that it was gonna potentially go down to the downside. What now? Hmm. Is it respecting the 20? We were getting kind of like deeper pullbacks here, so that's why I didn't want to get into 20 there. But now that we're seeing some 20 respect, that might change a few things here. Are we going to do a big curve like this? It's just going to collapse? Do. Nope. Decided not to do that. Okay. Thought it was going to be a big curve. I thought it was going to go like that. I thought I was going to do that. That's why I put the stop really short there so that because if it broke that curve, then it might really be starting to come changing direction. It could do a whole bunch of things, but without a short stop, you get in trouble easily in that situation. Let's see. We are in this pivot zone here where the market started to take off. So if it breaks, this thing breaks, this stuff, and we might come all the way back down here where the overnight lows are. All right, just let it go. Still getting lower highs. I think I'm a bit sure. Let me bring this in. Ah, shit. That's not good. Don't move your stop anymore, Mike. Don't move your stop. Let it go. Let it go. Let it go. Mm. Ah, damn. So these pivots are meaning something here. Hmm. What are you doing? Are you going to want to go back down? I wonder. I'm still thinking about shorting you. I think I'm going to short you. Off of that 20, in respect of this, getting off that 20, this thing might still want to come down. All right, just wait this out. Let me get ready to get out if I have to. Don't like that, but that's okay. We're still in it, though. We're still in it. S- Stay where you are, Mike. All right. If a serious edge starts forming here, then I'll get out. But bring this in a little bit more. This pivot here is showing some respect. There we go. All right. I'm done for the day. Think I'm done for the day. Man, this is a high tick out. I got low ticked out. Okay. Let me see here. I got low ticked out here. Oops. Then I got high ticked out here. Yeah, low ticked out. See, boom, came back, ticked me out, bam. Thought it was going to go down, came back just to tick me out just enough, turn around, bam. That does change your numbers, that's for sure. And it's frustrating. But the thing is that the trap is if you try to avoid that and you pull your stops back so that this never happens to you, what happens is that eventually the market won't turn back and it'll just keep coming back at you and back at you and back at you. Because you pulled your stop back to try to avoid this, your stops can be further and further away as the market keeps coming back at you. And because you're so far away now from your entry, then the pain of that big loss now, because you're pulling your stop back and the market keeps coming at you, gets so big that you just you can't take that huge of a loss. It's just too painful. So what you do is you start, instead of trading tactically, technically, the way you should be trading, you're now trading based on hope. And when you enter hope, that's when trading becomes very dangerous. And what do I mean by hope? Hope means that you are now hoping that the market is going to turn and come back down to where you want it to go. And sure, the market may turn and go to where you wish it to go. You may get away with it once, twice, three, four times, whatever. But what's going to happen is this: one day, it's not going to turn. It's just going to keep coming back at you and back at you. And let's say this is your stop, right? So what are you going to do? You're going to keep pulling it back and pulling it back and pulling it back. And every time you do that, the market keeps coming closer at you, closer at you, closer at you. You keep pulling back and pulling back. Market keeps coming at you, coming back more at you. And now, let's say this is your entry, right? This one right here. This guy is your entry. Look how far away now you are. If you keep pulling back your stop, look how far away you are now. And how big of a hole are you now in? And you're just digging yourself deeper and deeper and deeper because you keep pulling your stop back. And then eventually, because you can't take that loss because you are so far back and the pain of taking that loss is so much that eventually you're going to go too far and you have nothing left in your account and your account is blown. I hope I explained that well enough. And as we trade more and more here, I'll explain that more and more because that is my kryptonite. That is what I did for years. And time again, it just never works when you do this pulling back of your stops to avoid these low ticks or these high ticks. Eventually, yeah, you may get away with this sometimes. Like, look at this. If I pulled this thing further back and I had my stop back here instead, right? Like right here, then the market would have turned and gone in my direction. That would have been, oh yeah, great, that's nice. The same here, you know? If I pulled my stop back to, whoops, here, then the market would have not come up to my stop and it would turn and gone back down here. Great. But the thing is this: one day, the market won't turn and go where I want it. One day, it'll just keep coming back at me, back at me, back at me, back at me. And I'll keep pulling my stop back. So the better thing is to just take these low ticks out, these high ticks out. It's better just to take them and just eat it because you're still in the game when you do that. And if you do get high ticked or low ticked out, you can get in again. You can re-enter like I did here. I re-entered and it came back and it's all fine, right? Or you re-enter here. And look what happened. It came back and back and I knew it was like, okay, this went fine. And now you re-enter here for second time's a charm. And then it starts going back. You're like, okay, it's not going. You get out. But you're still active. You're still alive. Your account is still fine. And you can still continue trading because you're doing what you're supposed to be doing, basically. So eating the low or high tick serves you better in the long run. Sorry if that was a little long-winded, but that's I'm saying that more for myself than for whoever is listening to this video, honestly, because this is what I need to work on. I'm not talking about being a more disciplined trader. It's things like this that I need to work on. So anyway, that's it for today. Let's do some numbers. Let me get this off the chart. Just let the market continue moving. All right. Let's do some numbers. All right. August 20th, 8 trades, 1-4 for 20.64 points, lost 4 for 15. Average winner was 5.16. You usually want your average winner to be kind of double of your average losers. So that needs to be worked on. Win percentage 50%, which makes sense. Usually you lose about half your trades. Finish at plus 5 points, which I'll take it. You know, it's for just coming back to trading, plus 5 points in a day, I am okay with. And better than having losses and being down in the hole very much by like minus 20 points or something. And trade time was 45 minutes, and it was simulation trading. But the most important thing was that I followed my rules. I followed the rules I'm supposed to follow. I took this loss. I got out here when, seemed like you should have. I accepted the fact that I'm going to have 2 lost trades in a row. This I got in where I should. This I got in where I should. And due to seeing some kind of patterns here of the outer band being respected, I decided to take this last trade at the outer band. This, I hesitated right here, but I got in here, and I guess that's okay. And once again, got out near the outer band. This, I thought we were going to do a curve, like I said, but once I got in, I got out decently. Could have gotten out maybe down here more, but that's all right. But when I saw that V, that come up like this, and it kind of held there, I was like, all right, get in. And then it came back on me, and I took my loss where I should, even though that really hurt. Yeah. But then when it popped back down and respected this trend line, I kind of assumed, all right, I think we're still going down. So I got in right here at the 20, the green line. It's called the 20 SMA. Got in at the 20. Put my targets where I felt like I should. And once again, respected the outer band, got out, we were done. So even though I got low ticked in, high ticked out, I did, I still ended up in the positive for the day. So that's good. And I didn't like the low ticks and the high ticks bother me so much. Trust me, I didn't enjoy them, but I didn't let them bother me as much. So, okay, I think that's good enough for today. Thank you for watching. I really appreciate you guys being here. And I really am grateful that you're here so that I can become a better trader and hold me accountable for what I'm doing in the market. So until next time, I will talk to you. And also, thank you for, this is my first real video that I decided to record live and that I would put on my YouTube channel. So thanks for bearing with all the I know this isn't probably a great video, but thank you for bearing with it. You know? So, hopefully I'll just keep getting better at this as time moves on. But, thank you for your patience and understanding. You guys take care of yourself, and I will see you next time. All right, have a good night. Bye-bye.